I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It is June 3rd. It's Friday. This is the Mortgage Brothers Show interest rate update. We do this Monday through Friday. And if you're new to the channel, be sure to subscribe, like, comment. And remember, this is for informational purposes, not financial advice.
That's right. We're smart, but we're not brain surgeons.
That's right.
Dude, I don't even know if we wish we were brain surgeons.
I don't even know.
We kind of like what we do, don't we?
Right. And I don't even know if brain surgeons can even give good financial advice.
Right. You probably don't want them giving good financial advice.
You want them just
focus
on
the brain.
Yeah. So 30-year fixed conventional, 4.92 today. That is the same as yesterday. Really, all the rates on track where they were yesterday. 4.125 with the 15-year fixed.
Yeah, we could just replay the podcast from yesterday. Exact same. 5-year ARM, 4.49. 30-year VA or FHA, 4.25. 30-year VA, 4.25.
And these interest rates that we're showing you are coming from these factors right here for the conventional. These are the scenarios for conventional, FHA, and VA. There are no points associated with these rates. A lot of lenders out there are going to quote you rates, and they're going to have points, extra fees. These do not come with those extra fees.
No extra fees. That's right. It's about as simple as it gets.
Yeah.
Nothing extra.
Of course, it's based off of what we're pricing it off of these scenarios there, but it's simple. And again, we are noticing that a lot of banks are overcharging. And that's going to our next slide right now. Why do rates matter? I mean, we're a mortgage broker right here in Phoenix, Arizona. We service, Arizona, the whole state. And we are seeing interest rates at 5.25, 5.5%, 6%. New home builders are charging 6%. Tell me, how many times do you get a call?
Yeah, it's almost every day.
Yeah, so what happens with these new home builders? New builds. They'll get a call, customers who are buying a new home will be told to go to the builder's lender. The builder's lender is charging high rates.
Mm-hmm.
They're going to give you a lender credit.
Mm-hmm.
Yep, it's one of their incentives.
Basically, the lender credit is like the points.
Yeah.
But you're not even getting the benefit of the points with the lower rate.
Yeah. And so basically, there's that builder incentive, the builder credit. Anyway, they're showing you really high rates, and we're noticing really big. So what does the interest rate have to do with purchasing power? If we're at 4.92 today for a $400,000 loan, that is equivalent to the payment of a $378,000 mortgage at 5.42, which is just 0.5% higher. So same payment for $378 at this 5.42 rate as okay.
Mm-hmm.
So you're losing $22,000 in purchasing power.
So you're either buying something less or you're having to put more money down, depending upon how you want to look at it.
Yeah.
And there's probably, people that look at it both ways.
Yeah. We're a mortgage broker. Mortgage brokers are likely going to have much better interest rates than any kind of bank. When you hear a bank say, "Hey, we use our own money," we use our own money. What they're telling you is that they have high rates, and that somehow it's worth paying those high rates for their own money.
Mm-hmm.
And
that's interesting. I didn't think about it that way.
And so, but again, it's a myth that there's somehow a benefit to going to a bank paying a higher rate. And we just want to make sure to constantly focus on, okay, you need great service, you need good rates. It's all part of the package.
You get the whole package with the Mortgage Brothers.
Mortgage Brothers are mortgage brokers.
That's right.
Delivering both low rates, great cost, good service. And it's not worth it. Don't let anyone kind of convince you that, paying a higher rate somehow is worth it. Absolutely not.
Yeah. All right. This is not my favorite slide, but, every time I look at this, I think about that interest slide. Not the actual PowerPoint slide, but the interest slide. Look at that. That's been a slide for how many years now? And it's, and we're finally breaking out of that channel, as you like to say every day.
So 36 years we've been stuck in this channel from 1986 through March of 2022. You can see these recessions in these columns, in these gray columns, and I've highlighted in yellow just what happens to the interest rates, the 30-year fixed during those recessions. And you will notice during recessions, interest rates go down. And a lot of the real smart people out there, a lot of the economists are saying that we're likely going to be in a recession. Now, how great of a recession, how large, may not matter. Or it does matter, but the point is interest rates likely will be coming down if we go into a recession.
Right.
And if you follow us and subscribe, what you'll notice is we'll also cover why we have a good thesis. We well document, I think, the thesis that house prices will not be going down or likely stay pretty stable, because this is not 2008.
Yeah. When you're in a market where automobile pricing has gone up, that's when you know things are a little different than they used to be.
Yeah.
I don't know when the last time we've ever heard of auto prices going up. People talk about it, and you can trade cars, and you can do certain things. That's not what we're talking about. We're talking about the overall auto industry on the used car side.
And I wonder how many people actually follow used car prices. I mean, like you and I, we grew up looking at cars, used cars, and Craigslist and the Auto Trader. But I think a lot of people do realize that when you were looking at a car, your parents always told you that cars depreciated.
Yeah.
You took a car, you bought a car, you drove it for a year, it was going to be less the following year.
If ever you told somebody, hey, I bought a car to make money, they would laugh you out of the room.
Yeah.
They would say that's ridiculous. Again, there's exceptions for every little rule, but generally speaking, you would never buy a car to make money.
And the reason why these cars today are appreciating is not because they're worth more, but because the dollar is worth less. It's inflation. And that's what's causing all of this to happen.
Yeah, inflation, and the lack of supply. So that's you have the same demand and a little bit lower supply. Guess what? People are willing to pay more.
That's right. Home prices, cars, hard assets, anything that's an asset that you can touch.
Yep. I've got a neighbor building a new construction, and it's been taking forever. So again, someone's able to get a house like today, all done. They're paying more.
Right.
That's why they call it inflation. It is inflating. It is going up.
So be sure to subscribe, like, and comment. We'll be back on Monday, everyone. Take care.
All right. Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.